Hey guys, it is Julie here with JT.Wealth. Today's video, we are going over the post-pandemic airline sector and which companies we think will help your portfolio fly. So here we go. So welcome back everybody. I hope you all had an awesome long weekend. Nobody blew any hands off with fireworks and we all had a great time. Thank you to all the returning subscribers and all the new viewers here today as well. As always, please remember to hit that subscribe button and give us a like as well, please. So this video today is going to be going over airline stocks. Over the long weekend, I had to drop a family member off at the airport for a flight, and it was really a stark reminder of just everything that's happening with airlines amid this pandemic and the adjustments that they've had to make to continue operating during this time. We all know that airline stocks plummeted when this pandemic began. This graph here shows three major airlines and how much they've dropped over the last 2 years. If we look at just the pre-pandemic numbers to now, Delta Airlines went from about $60 a share to below $20, which was a 67% drop. Southwest Airlines went from $58 a share to a low of about $23 for a 54% drop, and American Airlines went from about $30 a share down to $9.15, which was a 71% drop. These low prices created a high influx of new investors, flooding the airline sector. Here on robintrack.net, you can take a look at the graphs for both Southwest Airlines and Delta Airlines. You can see the massive influx of new investors as that price drops. At the same time, when this pandemic first began, it was quite newsworthy that Warren Buffett was promptly exiting the airline sector. Since then, there has been a huge back and forth in the media between financial experts all discussing whether or not airlines are a good investment right now. Worries have run the gamut from bankruptcy to massive layoffs to just how long will it take to ever recover to pre-pandemic levels, if they'll recover at all. On the flip side, there is a massive pool of investors who are using Warren Buffett's investment strategy of being greedy when others are scared. We've looked at the graphs showing some of these companies that have dropped up to 70%. But long term, these airline companies are going to recover, and the government is going to make sure of that. During Trump's first stimulus package, part of that included the CARES Act, which had a benefit for airlines. This was about $30 billion in grants to assist in payroll support for these airlines. There are some certain limitations to it as well. So if they accepted these benefits, they had to refrain from imposing any involuntary furloughs or reducing employee pay and benefits through to the end of September 30th. They have to maintain certain limitations on their executive compensation through to March 2022, and they had to suspend the payment of dividends or other distributions and cease any stock buybacks through to September of 2021. Airlines have always been considered a risky investment, so you always need to do your research and make sure that it fits in your risk tolerance and your time frame. These are going to be a longer term buy. You need to be patient and give them time to recover, because airlines are going to need probably more than a year or two to recover back to pre-pandemic levels. But for those willing to wait out the recovery, there is definitely a potential for good returns there. On that note, here are a couple airline stocks that I consider to be a solid buy. First though, quick wine break. Okay, so the number one stock we want to discuss is Southwest Airlines. Their ticker is LUV, L-U-V. In doing my research, it was really hard to come across anything that disagreed with Southwest being one of the best airline stocks out there right now. Primary reason is that they mostly fly domestic. And obviously with the pandemic and travel restrictions, domestic travel is going to be the first area that recovers before international flights start taking place. Southwest as a company has never had a bankruptcy, and they've never had to resort to any furloughs or layoffs. Southwest has also publicly said that they have raised cash and short-term investments totaling nearly $14 billion. This is enough for them to have about 24 months, so 2 years of liquidity at their current burn rates. Those current burn rates are about $20 million per day in cash. But even if conditions were to worsen, the airline estimates that it has about $12 billion in unencumbered assets that it could borrow against if needed. The current price to purchase Southwest Airlines today is around that $34 mark. Their 52-week high was nearing $60, so there's definitely lots of room for growth there once we get back to some post-pandemic levels. The second airline stock that I feel is noteworthy here is going to be Delta Airlines. So these guys are one of the world's largest air carriers, and they really have a top-class management team. So at the beginning of this pandemic, their burn rate was about $100 million per day. They had a goal to bring this down to $50 million per day, and were actually able to exceed that and get it down to $30 million per day. They've done this by cutting costs with their scheduling and retiring some of their fleets. This is really a benefit because I think that the market is going to realize how conservative the management team is being, and we'll start to see a rise in that stock price. Delta Airlines also has billions in unencumbered assets should it need to raise any more money. There's an article on investorplace.com that I think said it perfectly. Delta stock is simply too cheap to ignore right now. So if we're looking at purchasing it today, the price is sitting around $28 per share. Their 52-week high was at $63.44. So there is a huge room for that potential regrowth if we can get back to those pre-pandemic levels. This is why Delta is the second airline stock that I think is a really good buy at the moment. Although there is never anything certain about the airline business and sector, these two companies are a fairly solid bet right now. I wouldn't go too heavy in airlines, but they definitely have a place in a larger diversified portfolio. Make sure you do your research and that it fits in with your risk tolerance there. There's a lot of things to consider. We know they're not going to jump back to pre-pandemic levels just like that. We have companies who are probably never going to operate quite the same again. I have a friend who is an accountant and worked downtown in a busy office and flew quite frequently for jobs all across the country and the world. She's now been working at home with the pandemic, and there is no plan in the future for her to return back to her office because their companies are realizing they can operate on Zoom or Facebook meetings just as effectively as they did in person. Business travel is one of the biggest sources of income for airlines, so it's definitely going to change the future of this sector. So that is my 2 cents on the airline sector right now, and a couple airlines that I feel would be a pretty safe bet. As always, I'm not your financial advisor, so make sure you do your research. These are not recommendations that you should buy, it's just for educational purposes. But I'd love to hear what ones you guys have looked into. Are you messing with the airline sector at all? Are you staying out? Which ones do you love, and what do you think? As always, guys, please remember to subscribe so that you stay up to date with all of our new videos and help us grow as a channel. Please hit that like button, give us some comments there, let us know what you're thinking, and have a wonderful Monday. Thanks.